Hello, folks. I'm so excited that you stumbled upon this video. I'm going to be telling you all about my take on the recession, the current question of has the bubble burst when it comes to the coaching industry, and how I think the recession is actually impacting that, and the responses that I'm seeing coaches take in regards to this, and really what I think you should be doing instead. Because I think the decisions of being very reactionary and changing your prices might not be the best decision for building a sustainable business that is going to become stable and be recession proof. So if you want to learn those new perspectives, definitely keep watching. Hit the like button. Let me know in the comments which one of my strategies most resonates with you and your business. For those of you who don't know me, I'm Eleanor Prisco. I work as a money and mindset coach and have been in this industry for quite some time, supporting people build sustainable businesses. So I'd love for you to subscribe if you enjoy this content. Go ahead and make sure to turn on notifications, share a comment with me below. And with that, I'll see you in the video. Hello. Okay, so for this week's money chat, I want to talk about the current economic status, like kind of the conversation of recession, the influences it's having on the coaching industry, what I'm seeing, and kind of the responses I'm seeing a lot of folks do, and kind of my alternate perspective of a different way to consider things. So, and this actually came up on one of my calls today in Money Academy. So if you haven't noticed, right, there's lots of conversation and talk about recession right now, and people are feeling like there's this whole contraction in the coaching industry and like the self-help industry. And I can totally understand that. And I can understand where that's coming from. And what I've seen a lot of people doing as a reaction to this, not necessarily a response, but like being very reactive when I think maybe this fear is bubbling up, is they're automatically lowering their prices, or they're offering some kind of sudden sale on their offerings and things like that. And I am, I'm not working with these people that I'm talking about. So of course, like I don't know their individual situations. However, normally when like we suddenly see people dropping prices, I think it kind of tells us a couple things that were going on. Number one is your prices may have been out of alignment with you in the first place, right? So one of the biggest things I help my clients do is actually get behind their pricing and have it be aligned pricing. So let me know in the comments, if you have experienced pricing yourself outside your nervous system, and then maybe getting that client, like booking that client, but then seeing the rest of your business dry up, right? What I'm seeing a lot of people say is like they're doing this because of a response to the economic environment due to recession. They're offering these new rates, right? And I can 100% understand that. And I also have a different perspective and like strategic thought here on how to pursue something different. Because I do think that like when you're saying that you've done all of this mindset work and you've built your business to being at X, Y, and Z level, and then you find yourself as soon as the economy is like maybe downturning, you're, being reactionary and lowering your rates so that you can get more clients. And kind of, it's like, it kind of feels a little bit like a smash and grab moment where people are like, oh my gosh, I need to just like get as much money as I can while the industry still exists. And I don't think you need to do that. So I think that there's an alternative path. And so instead of leaning in and like just trying to get as much money as possible from the industry or from your potential audience or clients, I think that the alternative is actually considering, oh, like what is the rates that I do want to be charging? And if I do want to lower my rates, do I have to suddenly lower all my rates and then like just take on more clients and potentially burn myself out? By doing this, like, or were my rates in general completely out of alignment before, right? So like, were you not actually energetically behind your rates in the first place? And so what I want to encourage here is for you to consider alternate options, right? Off the menu options. Like when we see recession, we don't have to think like, oh my gosh, we need to immediately lower our rates because no one is spending the way that they were before. It could very much be like, oh, is actually is it shifting to in-person work, right? Is kind of there being this shift from virtual to in-person that people are desiring now that, we're not all virtual all the time anymore, right? So it's like, oh, is actually, do I need to change my prices or do I need to change my offer? Number one. Number two is, when it comes to your investment levels, could you actually open up an alternative investment level, such as what I'm doing with Money Academy, right? I recognize that, yes, the current, you know, financial world picture, right, of like there is a recession going on can be very nerve-wracking as a business owner. And I also recognize that I have served clients at many different income levels. And so what I'm deciding to do with Money Academy is I'm doing a self-identifying sliding scale investment. What that means, and maybe this is possible for your business or one of your offers, is I have all the payment plans set up as 8 months and the program itself is 6 months. So that's 2 months outside the container. And the question is then, okay, which one of these pay scales best suits you, your bank account, your business, yourself, your nervous system, what feels right to invest, right? And so instead of being the response of like, oh, I'm just going to lower all my rates and need to get more people, right? And like blow my nervous system out by like needing to sell and try and get as much as I can. I'm instead providing people an opportunity to self-identify which one of these rates best suits you in your needs and your financial need, your bank account need, your business needs. Will you still can receive the financial education that we all never got, right? So I think that there are alternatives to this idea that, oh, we just need to, completely lower our rates when it comes to the current recession going on. And so I think offering a sliding scale investment so that people could self-identify what is the best investment level for themselves is an option. Of course, from the CEO strategy side, you want to make sure that you might need to limit the number of spots per tier that are going on, because you want to make sure that like if everyone signed up, at the lowest tier, would that be like a solid exchange for you? Or do you need to limit the number of spots per tier so that you feel still comfortable in the exchange and showing up for the program for the full amount of time, right? So that's like one option, an alternative to just like, okay, I need to lower my rates and like just be in response to everyone rather than like abandoning all the mindset work that you've done to get yourself to your current rates and like what is financially supportive of you and like what is supportive to your nervous system and things like that, right? So that's one alternative. The other alternative that I'm seeing that not a lot of people are doing when it comes to in response to this recession is like a stair-stepping option. And I have recommended this, and one of my clients is carrying this out, but it's like, oh, the first person books at this level, the next person books at this level, and the person after that books at this level. So it's like you're still allowing there to again be an opportunity for people to invest at a lower level with you, but financially, but you're still maintaining close spaces to your rates, right? That you've worked to get to in your business and that like feel like an equal exchange. Because I do think that there is, a big challenge. And let me know if you have ever felt this way in your own business or even in your own job, right? Is that you're doing a ton of work, but you don't feel financially compensated. I think that's a huge aspect of the entrepreneurial world, and especially the coaching world, is sometimes we can be charging things that are way below what feels good for us, but then we can also get on the other side of that and charge way more than like what is feeling like an equal exchange, and that can like throw off our revenue numbers. Because we start to like doubt like what's going on and what's happening for us. And so I think that there is definitely a balance of getting to know what your internal set points are and getting to know what you're comfortable charging and really finding what that balance is. But I feel like in this current economic environment with the recession, there's just been a lot of reactivity to the industry and like kind of saying like, oh, people are really disillusioned with the coaching industry and like people aren't happy with it anymore. And so it's like, oh, well, automatically your business is going to go down, your revenue is going to go down. And I want to like challenge that and saying like, well, it doesn't have to, right? Like you don't have to immediately lower your rates, and you don't have to suddenly be booking less people. Like, there are off the menu options of, having a sliding scale investment where people self-identify, stair-stepping potentially the open spaces you have in your practice, and seeing, kind of how that um, engagement works with your audience and seeing what the response is. I just think that a lot of folks automatically go towards this reactionary behavior. And what I have to say as a money and mindset coach, right, in like being reactionary towards what you're seeing and hearing, is like really what you really need to be doing is like, oh, wait a minute, like, where is this action coming from when I'm in my business, right? Like, if I am seeing a lot of people talk about the coaching industry dying, or like recession, and people just can't afford things anymore, like, how much of that is actually going on in my mental state when I'm not necessarily consciously thinking about it? Like, what is your subconscious saying in that sense of like, oh, okay, like, how often do you find yourself thinking these things as you scroll social media, or as you think about like your ideal clients, or filling up your next launch or your next program? And like, you're suddenly thinking like, oh, this is the constant script that's running in my head. And so therefore, what you're energetically aligning with, or what is predominantly your mindset, is you're thinking there's not enough, right? It's because people don't have enough money, there aren't enough clients, there aren't enough people to sign up for your program, whatever it might be. But really what is coming out is it's not enough. And so it's really important for you to be conscious of what is happening on the subconscious level, and potentially if, you're not having like if you're not being like conscious of your thought process. And so when we suddenly are feeling this pull, when we've been hearing all this talk of recession and the coaching industry, an important aspect, right, is to be like, oh, like, what is my reaction to this, or what is my response to this? Because I think there's a difference between a reaction and a response. A reaction is like, oh my God, I need to lower my rates, I'm going to put out this sale, I'm going to like, completely lower my rates because like I need to get clients again. And yes, you can do that. However, if like it's like a snap decision and it doesn't actually feel good, and you feel really frustrated because like you've built your business to like a certain level, and now you're having to completely cut your and like slash your prices, you have to ask yourself like, how well you're going to serve those clients, how well you're going to show up for them. Like, is this going to be a good container for you to hold, right? Where like, or is there another option that you're not necessarily seeing in your reaction, right? Going to that off the menu option that I talk about in a number of my videos, and like just in the feminine finance methodology, right? What's the off the menu option that we're not seeing here? And so it could be, oh, well, with the next launch that I do a stair step system, right? The first person that books in for my one-on-one gets this rate, the next person gets this rate, or a sliding scale investment, right? There's all these other options, I think, available to us that is like, oh, okay, like we can make a different offer. Or potentially putting out, maybe you have been wanting to put out a lower ticket offer, and have something that's more accessible to your audience because you've always been working in high ticket, and then maybe a low ticket offer is the way to go for you right now, and it just matches the market a little bit better. So either way, what I'm saying here is that if you're feeling the pressure, the crunch of like, oh my gosh, there's a recession, what are we going to do? What's happening with the economy? How is this going to impact my business? What should I do? What should I do? I really want to encourage you to reflect on like, okay, am I being reactionary, or what are like some strategic ways that I can approach this? Like really lean into, your CEO self, right? Like, you have started a business, you own a company, like your company is yours. You get to be the final say and decision maker in your business. And so I really want to encourage you to step into those CEO energetics and really think about, oh, okay, like, how do I desire to respond to these factors, and how do I want to shift my business to be able to navigate through this and like really, move through this experience and come out the other side and be stronger because of it. And what is also still in alignment with myself, right? And like my values. So it's like for me, right, with deciding to shift the Money Academy pricing structure, into a self-identifying sliding scale. It's something I'd been thinking about actually for a while after I helped a client do it last year with one of their big programs. And I was just like, wow, like next time I launch things, I would love to try and implement this. And it kind of fell to the back of my mind and I didn't think about it that much, but it's something that kind of continued to come back and be like, oh, okay, like what would a sliding scale look like? What actually feels in alignment for me? And sometimes it takes a little bit of time, right? To find that, to find what feels in alignment for you, to find what feels good, or find the best way to present it to people. Because the other thing that I've seen people doing to maintain their prices, but match the recession that I think is really like not a great idea is massively extended payment plans for short programs. So it's like, a 3-4 month program and you're looking at a 12-month payment plan, or longer. And I think that when I was thinking about reformatting Money Academy investment, I was like, do I want to do that? And it just felt like an absolute no for my nervous system. Like, and not only for myself, right, as the CEO of my business, and like, and this is a question you should ask yourself as the CEO of your business, right? But like also from a buyer perspective, it felt like an absolute no, right? Like I've been on extended payment plans. I've been on, a 10-month payment plan for a 3-month program. And it was something that like I did not like at all. Like at the time I was like, oh my gosh, this feels so good. I'm making this investment. But then once the program ended, after a few months, like it's just like an annoyance. Like you're looking at this and like, oh my God, how many more payments do I have? And the thing is, as a CEO, this is what I've felt from my own customers as well. When like they start getting to their final payments or like they're unclear on like how many payments they have left. And so it creates like, I think a lot of challenges on both sides. Like I think as a customer, it can build like frustration and resentment about the investment you made. And then from a CEO perspective, you can have clients that are kind of upset about like, oh, like, well, like when am I done this payment? Or like if a credit card has expired, they need to upload the new one. And then like that takes time, or like there is like a disconnect, right? Because you're outside the container, they're no longer working with you potentially. And so I think that it can really cause some challenges by deciding to just be like, okay, well, I'm going to keep my rates the same, but I'm going to create massively extended payment plans for people to get regulated and feel like that they can make this investment. However, like it's gonna like blow out their nervous system or cause more mindset damage or money relationship damage where they don't trust themselves to invest in the future, and they're maybe building like holding some resentment towards the program or the investment. They don't trust themselves around investing anymore. They don't trust the coaching industry. I think that this can be like really, really common. And I've seen it from both my own experience and from my clients' experience of offering really extended payment plans, and it just being kind of like this annoyance, right? Of like, oh, I still have payments left on that. And so even for myself, right, I've then ended up reaching out and just being like, how can I just like pay this off or get the balance, paid? And so I think that when we turn towards just like being reactionary and being like, oh my gosh, I'm just going to dig my heels in and like offer massively extended payment plans, or I'm just going to slash my prices. I feel like both of those are pretty negative options and very reactionary, when I think that we could decide to look for these off the menu options, look for the special, look for these new ways of being like, okay, like what is the more accessible offer I've always desired to put out there to my audience that is going to completely ring true for them? What is the sliding scale investment that feels right for me, that feels right for my business, that feels like an even exchange? And yes, maybe there's a limited number of spots. However, we're still getting an equal exchange, right? And I'm still feeling good about the service I'm providing, and they're still feeling good about making the investment and trusting themselves with their money and their investment, right? Or is it, a stair-stepping system where you have a certain number of spots open and, each person is stepping a little higher based on like how into their content, how into your content they are, right? And it's just like kind of one of those things of like getting really lucky of being able to invest early on, getting that sale price. So I think that these are alternatives to what I'm seeing with the coaching industry's response to a recession. And I want to invite you into them. So let me know which one of these off the menu options resonated with you the most in the comments. Let me know, if there was one or there's something that I didn't mention that has been helpful to you in your business, or that you've seen other coaches be doing that like have really resonated with you and have felt like it's not necessarily reactionary. It's very like, oh yeah, that actually feels like a really beautiful meeting place. So I think that this is massively transformative way to approach our pricing and investing, and definitely one that leans into sustainability, and also leans into building a business that is going to last, right? I do think that there is an importance of being adaptable. Of course, it is a pillar of the feminine finance methodology. So like being adaptable and responsive to what's going on in the current economy and industry and your own finances, 100% I think you should do. So I am excited to share these little observations that I've noticed with you. Let me know in the comments which one resonates with you. Let me know what you've been seeing in the coaching industry, or just observing with all of the, constriction that's happening with conversations around recession. And with that, I will see you next week for our money chat. Bye.